Dollar up, gold prices downers, vague, Fed vows zero rates to 2024, COVID grows global poverty, first time in 20 years. Gold prices extended overnight losers against a sharply rising dollar in London trade Thursday after U.S. central bank the Federal Reserve left financial markets disappointed with its September policy statement and projections. Dropping to one-week lows at $1,935 per ounce as New York trading began, the gold price fell even as real interest rates on U.S. government bonds also dropped, extending the break of gold and real rates near perfect inverse correlation now seen since the precious metal set fresh all-time highs at $2,075 in early August. With the US dollar gold price now trading 0.3% lower for the week so far, Euro gold traded flat from last weekend at €1,639 per ounce. The UK gold price in pounds per ounce meantime rallied from one-week lows, back to £1,500, after the Bank of England left its COVID emergency policies of near zero rates and £745 billion $960 billion in QE asset purchases unchanged, calling the outlook for the economy unusually uncertain, as the government re-imposed lockdown on 2 million people in northeast England and Brexit negotiations with Brussels remain stalled. In the face of COVID-19's second wave worldwide, the vagueness of the Fed's new policy statement disappointed investors, says today's Asian trading note from Swiss refining and finance group MKS PAMP, because they were looking for more definite targets. Some of gold's luster has, also, dulled in recent days as forecasters revise up economic growth numbers. The OECD yesterday cut its estimate for 2020's global slump from 6% to 4.5% of GDP, and the U.S. economy will shrink only 3.7%, the Fed said yesterday, rather than 6.5% as it forecast in June. But the Fed's latest forecasts now leave the U.S. economy more than 2.6 percentage points smaller by end 2022 than it predicted in December last year, with unemployment running at 1 in every 13 workers, the worst rate since 2012. Interest rates will meantime reach a longer-run level of 2.5%, the U.S. central bank says, unchanged from its end 2019 prediction. But its policy-making team sees no hike from the current 0.1% ceiling until the start of 2024 at the earliest, despite a rebound in consumer price inflation to the now abandoned target of 2.0% the year before that. The outlook for continued low real interest rates, says Canadian bank CIBC, plus increasing government debt burdens coupled with geopolitical uncertainty arising from the upcoming U.S. election are all supportive of further significant price appreciation in gold. Among U.S. gold investing products, neither the giant GLD gold ETF or its nearest competitor the iShares IAU changed in size on Wednesday. iShares giant silver-backed ETF meantime shrank another 0.3% as prices edged lower, taking the SLV's net liquidation since its number of shares in issue peaked in mid-August to 4.1%. Silver prices tracked the drop in gold Thursday, falling to one-week lows at $26.36 per ounce. Looking globally, there will probably be a quick GDP rebound as all the restriction measures linked to lockdowns are lifted, reckons World Bank chief economist Carmen Reinhart, speaking to a virtual conference hosted in Madrid today. But a full recovery will take as much as 5 years. COVID's impact also means that poverty rates worldwide will now rise, for the first time in 20 years, she added. Falling 0.6% in yuan terms today, Chinese gold prices cut their gap below London quotes to $40, the smallest discount since late July but still a huge disincentive for new imports into the metal's #1 consumer nation compared to the last decade's average premium of $8 per ounce. Like the US and UK central banks, the Bank of Japan today left its QE and interest rate stimulus unchanged, but also signaled a switch of focus to include targeting jobs growth, in line with the priorities already outlined by new Prime Minister Yoshihide Suga. Commodity prices also fell Thursday, as did Asian and European equities, while the US dollar rose on the currency markets. Real U.S. interest rates fell back to -1.03% per annum on 10-year Treasuries, a three-decade low when first reached on gold's break above $2,000 per ounce in early August.